Welcome to Morningstar. I'm Sunniva Kolostyak. It's Outlook Week, and I'm here with my colleague Kate Lin from our Hong Kong office to talk about China and the year that has been. Hi, Kate.
Hi, Sunniva.
So I think it's safe to say that Chinese markets have completely changed between 2020 and 2021. We've had COVID at one end and we've had regulatory crackdown at the other. So can you talk me through why this year has been so different?
Well, there is a very interesting saying in here. So last year, winners are those that own the most Pinduoduo, Education, and those kind of stocks. So this year, they wish they avoided them all. But back to what you asked, first, the regulatory crackdown is, of course, said to be changing the game completely. So secondly, fund managers are telling us that the Chinese government is emphasizing the quality element in their economic growth. So next will be the continued drive for self-sufficiency in advanced technology and the goal to common prosperity. So all of these pass on implications on the geopolitical front and the investment front.
So do you also think this holds true for the property market, is considering everything we've seen with Evergrande?
Yeah, absolutely. So China's economy has been heavily dependent on property development in the last decade. So now the government is trying to rein in a housing bubble and trying to restrict how developers' leveraging level. As our manager research analyst has pointed out, government interference has always been there for emerging markets. It's nothing new. So for the market like China, it is still in the emerging world. The government is always behind the scenes to guide the country's economic growth and development plans.
So, yeah, that kind of growth is obviously why EM is so attractive to investors. If we talk about performance, have you seen a big difference between on and offshore markets?
Yeah, investors may have spotted the discrepancy in gains and losses between onshore Asia's market and offshore Hong Kong and US ADR markets. So think about some targeted sectors by the regulators, like e-commerce, mobile gaming, and education stocks. They are mostly, if not all, listed in the offshore side of the Chinese capital markets. So relatively, the onshore stock market is holding up quite well year to date. And also thanks to some of the top performers in renewables and batteries, because you can find some of the most interesting names in the Asia's markets.
So if I look at our fund data, what does that tell us? Are fund managers and professional investors returning to the market, do you think?
In fact, the editorial team did an analysis on Morningstar medalist managers. We found that not all Greater China equity managers are avoiding the e-commerce giants completely. So one of the interesting cases is that a fund that has not been holding Alibaba since June 2020 is returning to the market and rebuilding its position around the third quarter of 2021. And some of the managers are actually staying put on their JD position through the summer. So what I could say is, compared to 2020, it's really hard to put a summary that can describe all of their buy and sell.
Thanks, Kate. For Morningstar, thanks for watching.